Hey, what's up everyone? Alexandre here with the latest block. I want to do a little bit of a live stream update. Started this yesterday. So it's June 19th. First of all, happy Father's Day. Happy Juneteenth for all those celebrating. So I want to talk about Bitcoin, the market, take a little bit of a further view in terms of the long range situation. So first of all, as a little bit of backstory, with COVID, February 2022, the Federal Reserve, the central bank of the United States, began a policy of quantitative easing to shore up against a major depression that potentially could have occurred. So what that means is they essentially lowered interest rates to zero, their benchmark rate to zero, which is the rate all other banks in the United States use for their lending criteria. So they charge interest plus whatever the benchmark rate is. So lowering the benchmark rate to zero encouraged banks to loan money to businesses, encourages businesses to invest, to borrow, to build, and essentially is generally viewed as an action which stirs the economy, spurs it to grow. So policy of quantitative easing includes the interest rates, also includes essentially money printing, as we call it, which usually is a bunch of ones and zeros these days, but essentially creating a lot of more money, putting it into the system, and also other actions, including directly buying bonds and stocks, ETFs, for the first time. The Federal Reserve often buys bonds, but the first time it actually has been buying stock ETFs. Literally pump up the market. There's also stimulus checks to individuals, while a smaller portion of that overall whole, that general environment meant there's a lot more liquidity in the system. There's a lot more extra money. People have extra money to invest. So a lot of that money went into the stock market, went into Bitcoin. The Federal Reserve has now flipped that policy, as that much extreme amount of money in the system has resulted in inflation. U.S. inflation hitting 8.5%, 8.3%, and 8.6% over the last 3 months. So record high inflation, highest in the last 40 years. So the Fed's has a job, basically two jobs. One is to keep inflation in check. They have a unwritten kind of targeted rate of 2% inflation. So going up to 5%, 6, 7, 8%, obviously above that. So that's their first mandate. The second mandate is to keep unemployment low. So unemployment, while it's relatively low, inflation is extremely high. So their job is to balance those factors. The tools they have is to increase interest rates. And there's also the quantitative easing. So now they're in a phase of quantitative tightening, QT. They're actually selling off their bonds and stocks. They've cut shorter on creating more money to some degree, and they're increasing interest rates. So the Fed has increased interest rates, I believe now 3 times, up to around, it moved up 0.75% to over 1.5% last week. And they're looking at another 0.75% increase in July, depending on the employment report and the inflation report. That being said, Bitcoin has been severely affected. Bitcoin has been tracking very closely with the NASDAQ, but is a more volatile, newer asset. NASDAQ is I'm referring to the NASDAQ 100, the index of 100, mostly tech stocks on the NASDAQ exchange. The NASDAQ is in a bear market, the S&P 500 is in a bear market, the Dow Jones Industrial, which is composed of larger, older companies, a lot of utilities, pharmaceutical companies, and retailers that are generally larger, more stable companies, not as focused on growth. They believe most or all of them pay dividends. So those generally move slower than the other indexes. So they're not quite in a bear market yet. A bear market in stocks is defined as a period of 20% down from a recent high. So NASDAQ is over 30% down. The S&P 500 is now officially in a bear market, down over 20%. And the Dow Jones is getting close. I think it's over 15% down. So moving along to crypto, BTC is down from its all-time high of 69,000 in November when the Fed started quantitative tightening direction, so now it has another crash this past week. It crashed the week before. So covering some of the exact elements what happened, and zooming out. So that's the overall macroeconomic scene. So it's generally when rates are being raised, that's bad for stocks. That's bad for essentially anything that's not essentially an emergency commodity. Like oil generally does well, gold generally does well in that environment. So over the past 6 months since November, oil has been skyrocketing in price. As we all know, if you're paying gasoline at the gas station, the price of gasoline is significantly pumped up. So moving on to Bitcoin, crypto. Okay, so now with this environment of tightening, the amount of people buying, retail investors buying, is smaller, while a lot of the big players have now kind of adopted Bitcoin as an alternative asset, crypto as an alternative asset. Watching the market, they're obviously trading, they're looking at the buy low, sell high dynamics, and a couple shocks have occurred in the crypto space, moving BTC crypto down. Bitcoin was around 39,000 when Terra Luna's UST token essentially collapsed. The token is essentially called an algorithmic stable coin, meaning it was essentially supposed to be kept at $1 peg that could be used to trade against or use, right? It was supposedly a stable asset, but it lost its peg to the dollar. And the way the algorithm is supposed to work, Terra Luna prints more of the Luna token to keep the peg. That printing tens of trillions, I believe, of Luna tokens in a few hours sent the Luna token price down to close to zero. Essentially, $40 billion were lost in a couple days. It caused a shock to the overall market. Terra Luna Foundation also bought $3.5 billion of Bitcoin. So they sold that off, causing part of the market shock. Also, other factors include the fact that a lot of people, had their savings in UST, supposedly stable asset, in a protocol getting 20% returns. So that turned out to be unsustainable, bad engineering, and it collapsed. The next shock that occurred in the market, now a lot of these crypto hedge funds with billions of dollars under management, places that people have their savings in, have had some insolvency worries, and a lot of them have some leverage or borrowed against crypto, especially Bitcoin and Ethereum. So that's causing further shock in the market, and rumors are abound that most exchanges are having such issues. That's not confirmed, but there's a lot of panic in the market, and people are selling because of that. So the liquidity questions have been around Celsius, as well as a company in Asia called Babel Finance that have actually suspended withdrawals as they're hopefully working to get their liquidity crisis under control. The drops in Bitcoin have caused further worries and liquidations of people that have either borrowed against their Bitcoin or even worse, use leverage, borrowed, and those bets are extremely risky in any conditions. So as I personally have always said, friends don't let friends use leverage. So those are some of the negative factors, some of the things that are occurring. Bitcoin dropping into the 17,000s yesterday, back in the 19,000s right now. There's not a massive bullish push right now. There's not that much liquidity being injected into the market. So it does look like a lot of the major players that may be looking at buying or waiting and looking at technical indicators to see a turnaround. Now, that's the short term. As I mentioned before, this is not financial advice. And also, want to be very clear, a few tips to think with from an educational perspective. Don't borrow to invest in crypto. Don't invest more than you can afford to lose. And have a plan, stick to it. Trading and investing are different activities. So trading in crypto is not something any beginner should be involved with, in my personal opinion. That being said, let's move on to some factors, zooming out for those with the 10 to 20 year view. Bitcoin, Ethereum, crypto as a whole. Market sentiment of surveys we've done on Twitter indicate that the still long-term bullish sentiment for Bitcoin a little bit less, but still positive on Ethereum. And for the crypto market as a whole, as regards to individual cryptocurrencies outside of Bitcoin and Ethereum, there is very little bullish sentiment, at least on my section of crypto Twitter. So it does seem to be that investors and traders are flocking toward Bitcoin and fiat as a safe haven in turbulent market conditions. Now, zooming out, I recently read a blog this morning from Lou Kerner, the chief crypto analyst at Quantum Economics. He's a legend in the space, early adopter, long-term investor, CEO of Just Stable Coins. He's got $1 million price target on Bitcoin long-term, and he pointed out that in the blog that markets are cycles of bubbles and crashes. Amazon went up over 60 times prior to the dot-com bubble. In other words, 6,000% gains, and then dropped 95% in a short period of time, in a matter of months. Now, looking back at the chart back 21 years, that drop is hardly noticeable, as Amazon has had tremendous gains since. And anyone holding, not noticing, would literally not notice. Difficult to see the drop on the graph long term. So zooming out 10, 20-year view, if we're correct about our long-term price target for Bitcoin, essentially this is a blip, not even a crash, bubble, etc., but simply a blip. So if you're bullish about Bitcoin or crypto in the long term, make sure to smash the subscribe button and comment on the video. Love to hear your comments. And actually, before we end, just final point, just a distinction. Bitcoin has specific qualities you should learn about its scarcity and decentralization. Not every cryptocurrency, in fact, most cryptocurrencies do not share those qualities. So I'm bullish crypto in general, but you need to do your own research. Varying market sentiment on this says different things. One opinion is that 99% of cryptocurrency is essentially garbage. I've said before 90%, 95%, as now we have over 20,000 cryptocurrencies. I'm closer to the 99% opinion. That leaves about 180 great projects out there, or 200, which I think is close to legitimate. 95 to 100% are garbage, and 1 to 5% are going to change the world. So I'm not a Bitcoin maxi, but I'm a permanent bullish on Bitcoin and the innovation that crypto has the potential to bring. So that being said, I'm keeping a long-term view and going to keep dollar cost average in. If you dollar cost average in, you have less emotional attachment as well as mathematical risk implemented in your strategy. So, of course, that involves being right about your investment target. That being said, have a great day. That's some comments in the market. I hope you enjoy. Make sure to hit the subscribe button and comment if you do. Share this with a friend, and have a wonderful Sunday.